Hi guys, welcome back to the channel and I'm your host Dr. Seema Jain. Before I start this video, I want to tell you to join me for the live trading. Aaj, today I have given a call buy on call option of Bajaj Finance and I gave a call buy on call option of LTTS. Both of them have given beautiful breakout. People have made huge amount of money and it's all free. No obligation, no strings attached. Simply, objective is keep learning. If you keep learning and keep earning little bit amount of money, small amount of money, your momentum will be high. You will be able to you will be able to pursue your passion. When you see money coming in, you will develop confidence, and that's the whole objective. I really want everybody to make money. And if you want to join me on my Telegram channel, the link is in the description box. Just go there and you can join the live trading webinar link, as well as you can join me for the live trading tomorrow morning, every day in the morning from 10 to 11. So I'm going to make this video on the request of one of our subscriber who has asked me to compare these two companies called Tatva Chintan Pharma Chemical Limited and Clean Science. So दोनों companies, both the companies are very good. दोनों companies अच्छी हैं. Let's talk about their fundamentals. So Tatva has been launched in July 2021, almost like 1 year. But have a look at the price. Price is almost like range bound. It is exactly where it opened. The price exactly stands where it opened. Okay, so there is not much of gain in the price. But let's have a look into the company's fundamentals. Company is a 5,000 crore company. I'm checking it from the screener.in. Current price is 24.28. Stock PE is little high. Book value is 213. That means current price is almost 10 times the book value. ROCE and ROE both are very, very good. And let's see what screener.in has to tell. Company is expected to give good quarter. Company has good return on equity. ROE is about 33%. And debtor days have improved from 75 to 47. What are the cons? The first con is that the stock is trading at 11.4 times. Tax rates seem low and company might be capitalizing the interest cost. Now let's go further. Before I do the rest of it, I want to see what exactly the company does. What is their sphere of work? कहाँ पे काम करती है company? किस चीज का इनका business है? So Tatva Chintan Pharma Chemical Limited. And till it is opening, let me go further down and see what is happening. So company has increased their sales, almost doubled in last 2 years, from 52 to 99, and operating profit margins have been pretty much constant, almost like 20-22%. Sales year on year basis have definitely grown from 2018 to 22, almost like it has become 3 times. Operating profit margins have been constantly growing. That's a very positive sign. And if I have a look into it, reserves have gone up. At the same times, the borrowings have also gone up, but the reserves are higher than the borrowing, so which is a positive sign, which is okay, perfectly fine. Then what is very important, that company must have a cash from the operating activity. So this company is definitely generating cash from the operating activity, and let's see what they are exactly doing with their cash from investing activities. So they have purchased fixed assets, which is good, and they are investing in other items. Okay, now I want to see what they are doing with their financial activities. So proceeds from the shares. So they've got the money that they've got from the shares, and proceeds from the borrowings, which is 43, and payment of borrowing, repayment of borrowing, interest paid. So overall they are 59 crores, but out of them they have the proceeds from the shares. And then debtor days have gone down, which is fine. I want to see how is the promoters holding, which is pretty much constant. FIs are almost constant holding they have in the last 1 year, 3.53%. DIIs have increased their holdings in the stock. That means their conviction in the stock is growing, whereas public has reduced. See, this is how public works. You must understand this point. Because the stock is range bound, public is exiting, right? Whereas I will, these are finer points you should notice. FIIs are not exiting in this drop or in this range bound market. DIIs are increasing their, but in general, public is reducing their stake. That shows the conviction you hold in the company, right? FIIs, DIIs have the conviction, but you don't have the conviction. You and I don't have the conviction. And that is why we are exiting the stock. So what are the flaws here? What are the things that I am not liking? One is that the stock is trading 11.4 times the book value. That's a very, very big, point. And the other important point is that the PE ratio is very high. The next point is that they have quite strong borrowings. That's again a very, very important point, that the borrowings have been increasing. Look at the borrowings: 56, 77, 91, 90, and 120. They've been continuously increasing. The reserves are also increasing, which is fine. And what are the other things? I don't know what their other investing items, what does it exactly mean? What are they using with this 112 crores? That I don't know. And what are positive here, that their operating profit margins are pretty stable at about 22%. They are pretty stable. And what is also important, that the DIs and FIs FIs are pretty much constant, and DIs have increased their position. Now the next stock that I'm looking at. So now how should we look at Tatva? Tatva looks pretty good above 2540. A target of 2950 can surely be expected shortly. And at the same time, I want to see how Clean Sciences looks like. Clean Science and Technology Limited. So the stock has actually formed, or it was launched almost at the same time, exactly 1 year. Have a look at the price. Stands where it was almost a year back, right? There is not much of increment. They both are exactly having the similar pattern. A very important point to be noted, that they both have bounced back from 1440. Here also, a very strong support zone is formed at 1440. Now, Clean looks to be standing on a very strong footage again above 1621. And let's before I go on there, I want to see what is happening in Tatva, what they exactly do. Is a private limited having registered in Ankleshwar, Gujarat. Tatva has successfully established an integrated model comprising world-class manufacturing infrastructure. I want to see what are their businesses, manufacturing facilities, or rather I would go to the products. So they are basically into structure directing agents. SDAs are quaternary salts, which are chemicals which help the formation of particular channels and pores during the synthesis of zeolites. Zeolites have varied application, including as catalyst and absorbents. In particular, zeolites promoted with transition metals and copper and iron. See, what I can understand from here, that this is a very, very niche company. It's not that everybody can do the similar stuff. So company looks pretty much very, very niche company in its own category. So I want to see what is happening in Clean Sciences. So Clean Sciences is a 17,123 crores company, 17,000 crores company. P is very, very high, and ROC is 46%, RO is 34%. Very, very good as far as returns are concerned. Then the pros are basically company is debt free, company is expected to give good quarters. CAGR is extremely good, 37.3%. ROE, return on equity, is very good, 40%. Company is maintaining a healthy dividend payout of almost like 50%. The drawback is that the price is extremely high. It's trading at 21.8 times the book value. Debtor days have gone up. That's again a negative. But let's have a look at other, compare it with peers. So if I compare with peers, Deepak Nitrite has very low PE, but rest all are having, and Aarti Industries has low PE. But rest of them have pretty high PE. So it's an expensive investment. But let's see what's happening to their sales. Sales have been constantly increasing. In 1 year, the sales have become double. Have a look at the operating profit margins. Very, very strong numbers here. 50%, 50%, and 41%. Then what is happening to sales have grown, even the expenses have grown, but the profit margins have been pretty constant. And let's have a look at what's happening to the reserves. Extremely high reserves of 758 crores. And important thing to notice that the reserve have been growing year on year basis. Whereas the borrowings are zero borrowing, cash rich company. Then cash from year on year basis, they have been generating cash from operating activity, a very important aspect for all of us to consider. Then they have purchased fixed assets. They have purchased fixed assets. They have investment. They have purchased some investments, and they have sold some investments. So this 225 they've got by selling some fixed assets, some investments, by selling some investments. Then investment in subsidiaries is 55 crores. So overall, they do have the net cash flow of about 4 crores, and debtor days have gone up, right? They were 60, 50, 60, and 50, and 82. That's a concern. That's not a very positive point, but have a look at the promoters holding. It has decreased, starting from 94.65. I think they have liquidated their, holdings. That is how it has been diluted. And after that, it has been constant. Look at FIIs. FIIs have been constantly having good stake in the company. DIIs are also having good stake, and general public is also holding pretty strongly the stock. Now quickly we will have a look into what does Clean Sciences do, and then I'm going to compare their, so they are basically into fine chemical manufacturing and exporting company in India. So as I told you, the companies which are into, India is a leading manufacturer of chemicals and exporter of chemicals. And any company like Deepak Nitrite, Aarti Industries, you talk about 𝐿𝐾𝐿, you talk about, I have compared 3 more companies previously. All those companies, if you compare all the chemical companies, if you buy, you can just leave it for your future generation, and they will just live peacefully without worrying. So Clean Sciences looks good. Now what I'm going to do, I'm going to compare the forward PE. Clean. Yeah. So here is the forward PE of Clean. Forward PE is at 52. That means right now Clean Sciences is available at a cheap valuation. You can see the forward PE ratio is at 52. If the forward PE ratio is less than the current PE ratio, then the valuation of the stock at this point of time is cheaper. Now let me have a look at what is happening into Tatva. So here is the forward PE of Tatva. So from 52, 55 to, see the forward PE here also is lesser than the current PE. So historical PE or the current PE is about 55 and the forward PE is 46. That means the valuation at this point of time are cheaper. So both of them have the cheaper valuation, but by looking at the price, by looking at the market cap, the ROCE, ROE, and most important thing is that the borrowings are zero, sales have been growing up on a regular basis, and market operating profit margins have been very stable, and the FIs and DIIs are pretty much stable in this particular stock indicates, and there is cash from the operating activity. There's only one little negative where the debtor days have gone up, but probably they may improve upon this. As of now, looking at the clean sciences and the Tatva, I find hands down it is clean science that I would give my vote for. The price is also very attractive at this point of time. So if we need to enter in clean science, we will enter at 1630. 1630 will be our entering because our stop loss is very close by. 1440 is our stop loss, or we can accumulate more because this is where stock has picked up again and again. So buying opportunity is at 1630 for a target of 1843, then 2000, and then 2150, and after that 2350, and then finally 2700 is the target. Time period could be 1 year, but hands down clean sciences. But both the companies are good. What can you do is put some money in Tatva, put some money in clean, but more weightage you can give to clean. Both of them are right now heavily corrected at the price where they were launched 1 year back, cheaply available. Forward P is low in both the cases, so my vote goes for clean sciences hands down. So maybe 75% in clean sciences, and about 25 to 30% you can put in Tatva. This is how you can distribute, but definitely clean science stands out way better investment by looking at the fundamentals and looking at the price. So keep learning, keep earning, and for similar videos, keep writing in the comment box what would you like me to do. I will do those analysis for you, and I will definitely ensure you learn and you make good money along with me. Do join me for the live trading every day from 10 to 11 and make good money. The link is given in the description box, and do join me on my Telegram channel. Take care. See you. Bye bye.